of bank-grade digital credit scorecards based on smartphone metadata, CREDOLAB has seen an increased appetite for using alternative sources of data owing to the changed consumer habits post-COVID. The Singapore-based company is now betting big on India, helping businesses improve their understanding of their customers' digital risk DNA. Joining me now to talk about the India business is Tarun Kumar Kalra, SVP Global Head of Sales at CREDOLAB. Tarun, welcome to the show. Now, first up, CREDOLAB provides a solution for businesses to evaluate and approve customers whose creditworthiness might not be otherwise, easily ascertained. Take me through your technology and also what sets you apart from the other players who also use alternative data to provide credit assessment solutions.
Shruti, it's a pleasure to be with you on this show. Thank you for the question. So CREDOLAB has carved out a niche for itself wherein we are probably one of the few companies that are harnessing the power of smartphone-based behavioral metadata to create scoring algorithms that predict probability of default. Now, when you ask me the question, how different are we from others? I think there are always two parts to it. One, what you collect and what do you do with it? Our differentiation primarily comes to how we handle that data, our machine learning algorithms, which are data hungry, and we have millions of features, which helps us analyze those data points and come up with a score that is highly predictive and coexists with the current credit framework of lenders. Data privacy, of course, is something which we are very passionate about as well.
Absolutely. And I was about to ask you that how are you ensuring data privacy?
I think that's a very good question. And at times I am asked that the regulatory environment is really getting tougher. And how do we feel about it? I think I feel very good about it because this is our opportunity to differentiate ourselves. Because Peter, our CEO, when he set up the company 5 years back, was clear that CREDOLAB will collect, process, and store no personally identifiable information. So it's not that we are governed now by these changes. From day one, we make sure we collect no actual data, no personal data, and only analyze metadata. And that's how we differentiate ourselves from many other competitors who are out there. Okay, Tarun, now let's just talk about the sector in general. The digital financial services market is evolving and the sector is seeing a growing demand from new segments like, neobanks, market aggregators, buy now, pay later, and e-wallets, in addition to the traditional banks and non-banking financial lenders. How are you tapping into this enhanced target addressable market through your embedded finance and embedded scoring? Shruti, there couldn't have been a better time than now to play the role of embedded finance because of the changing patterns of this new generation which wants to consume financial services from any point. I think this is the best point for embedded finance to play out, and CREDOLAB plays a very important role in embedded scoring, which helps embedded lending. So if you look at the success story of buy now, pay later, or you look at how neobanks are harnessing technology, embedded finance, embedded scoring, in my view, has leveled the playing field and what I call the democratization of lending. Now, any player can get into lending. You have seen that changes, and we are working closely with some buy now, pay later companies, ride-hailing companies. It's embedded finance that's helping us go and expand our footprint into these market adjacencies, which see the benefit of using this. And I just want to add one more thing. The unbundling of the banking services is the one that accelerated this. Most of the banking services are now componentized, and they can be consumed by any non-banking finance company to offer financial services to the end consumers. And that's the play CREDOLAB wants to play on.
Okay. Tarun, you spoke about acceleration, and the pandemic has given a boost to the digital banking scenario globally. So take me through your current growth numbers.
Yeah, I think it's very exciting. We had a terrific 2020, but it was early days of the pandemic were anxious times, right? We are working closely with our clients on a pay-per-use basis, and we did see a big dip in lending activity and naturally the use of our services. But as the pandemic evolved, most of the lenders globally saw the value of our solution because our scoring remained stable during the pandemic time, whereas the traditional way of scoring was not being able to be as predictive as it used to be. So I think the pandemic reinforced the resilience of our solution and the acceptability of our offering globally by all lending institutions. And we closed off the year on a terrific high. We had phenomenal Q3 and Q4. Our financial year ends in December. So we logged off 2020 as one of the best years But I would say it was early days, were anxious, and we signed a record number of clients in the year 2022. We signed 28 clients, and now we are present in 26 countries globally, Shruti.
Okay, terrific numbers there. And you also mentioned that you have a pay-per-use revenue model. Can you elaborate more on that and also tell me the revenue split?
So pay-per-use is a very ideal way for us to be part of the growth journey of our clients. We did toy with the idea of subscription revenue, wherein you charge the client a fixed sum, but then you are not part of the growth story. And one of the reasons why I told in the earlier comment is that when the pandemic hit, we saw our revenue dip because we were pay-per-use. But now when the clients are seeing increased activity, we are riding that growth with them. So pay-per-use is a business model more aligned with the client's growth, and that's our contribution to their growth story. When you ask me the split, we have two components of revenue. One is the upfront platform setup fee, and the other is the pay-per-use fee. In the year 2020, we saw a split of about 22% in the upfront fee and 78% on pay-per-use monthly revenue that we generate.
Okay, all right. Tarun, let's now focus on India. What are your estimated growth projections here? What banks are you working with? And also any new hirings undertaken in India?
So India remains an exciting market. Like any fintech, like any global company that wants to harness the power of developing economies, India is the place. So we have got 5 signed clients in India. We are working with the leading non-banking finance company. We have signed a peer-to-peer lender, salary advance company, a new age digital tech company. So we are making some good progress. And on the basis of that, we have done 2 key strategic hires in India in the month of December and January. So we've hired a head of sales for India, and we have hired a global pre-sales and solution consulting head. Both are based in Bangalore. So India is not just a market for us. It's also going to be a ground to cultivate new talent, innovation, and be that engine of growth globally for us. India, we will be hiring more this year, depending on the growth we see. We have high aspirations from India, and I'm looking to make our signed clients 5 times by the end of December this year. So we started the year with 4 clients. I'm hoping to exit the year with 20 signed clients in India.